Welcome to week 9. I am Prakash Choudhary, a NISM-certified research analyst, and you're watching Market Insights by Prakash. Last week, we discussed how Nifty and Sensex were consolidating for 11 sessions, waiting for a breakout. This week, we got it, and it's downward. Today, we cover what triggered the fall, key market updates, sectoral and stock movers, and your outlook for the upcoming week. Nifty opened Monday with a 200-point gap down below its 50-day moving average at 23,970, while Sensex gapped down 690 points. Selling continued through Tuesday before markets found a base on Wednesday and reversed. The 3-day bounce was not a fundamental reversal. It was a technical one due to oversold RSI and expiry short covering. Until Nifty closes about 24,000 and then 24,500 consecutively on volume, every rally is a sell, not a buy. So, who drove the 3.5% crash in just 2 days? Three letters, FII. Monday saw 8,438 crores liquidated across all derivative segments. Tuesday and Wednesday added 6,663 crores more. The weekly tally 13,585 crores sold. The silver lining, FIIs turned net buyers in the last 2 days with 1,400 crores, with their first meaningful buying in over 2 weeks, confirming the short covering story. The big question, how long will this fall last? One word, oil. It triggers a circular chain reaction. Crude rises, INR weakens, FPI exits, OMC losses, inflation spikes, Fed stays hawkish, fiscal slippage. Watch Hormuz Strait, not just Dalal Street. The Trump-Xi summit was a major disappointment. China did not commit to pressuring Iran. Over $900 billion was wiped off of US markets. The rupee hit an all-time low of 96.14. RBI sold $38 billion to defend it. The government hiked gold and silver import duties from 6% to 15% to curb dollar outflows and is proposing to cut bond withholding tax from 20% to 5% to attract global capital. On inflation, WPI exploded to 8.3%, a 3.5-year high, on fuel shocks, while CPI is rising slowly. If WPI cost pass through to retail, the RBI will be forced to delay rate cuts. OMCs raised petrol and diesel prices by rupees 3 per litre and CNG by 2 rupees, while the government hiked petrol export duty by rupees 3 per litre to secure domestic supply. Three critical updates. No Fed rate cuts in 2026, confirmed by the new Fed chair. US 10-year-old yield 4.54% to 4.58%, a one-year high, pulling capital away from emerging markets. Saudi Aramco CEO, oil market won't normalize until 2027 if the blockade holds. Before we move ahead, please take a moment to subscribe to Market Insights by Prakash. Your support helps us keep these data-backed briefs coming every Saturday. Now, let's look at the updates that are driving the market. For the week, sectorally, pharma, healthcare, and metals were the winners, all defensives or commodity beneficiaries. While the laggards were Realty, IT, consumer durables, auto, PSU banks, financial services, oil and gas, cement, media, private banks, chemicals, FMCG. Stock-wise, the top gainers were Idea, Oil India, Biocon, Vedanta Limited, and M6, and the top losers were Keynes Technology, Kalyan Jewellers, Torrent Power, Tata Motors Commercial Vehicle, and Lodha. What should be your outlook for the next 5 to 7 trading sessions? The primary variable, watch Hormuz, not charts. The US EIA's May 2026 report confirms the Strait Hormuz remains effectively closed until late May, with full normalization unlikely until late in 2026. Crude stays range bound at 100 to 110. Simple rule, no Hormuz resolution, no sustained rally. Key Nifty levels to watch are 1. 24,000 to 24,200. This act as a strong resistance. Consecutive close above that only will signal a trend reversal. 2. 23,550, 23,600. Act as an immediate support. Any close below this will create fresh panic. 3. 23,000 to 23,200. Any close below this correction becomes a downtrend. And 22,800. Any close below this along with crude oil above $120 will begin a fresh bearish market. Let's see the three scenarios going ahead into next week. 1. Bull case, Hormuz partial reopening, crude below $95, Nifty reclaims 24,200 to 24,500, add quality large caps aggressively. 2. Base case, status quo, crude at $100 to $110, markets range 20,900 to 24,000, VIX above 19, ideal for option sellers, iron condors only, no naked directional bets. 3. Pair case, crude spikes above $120, rupee hits 97 to 98, Nifty range breaks 23,000 and slides to 22,500, 22,800. Hedge with Nifty PE. Shift the defensives. Don't fight this team. Sectoral strategy fun. Overweight for pharma healthcare based on a trade deal tailwind. 2. Defensive over Operation Sindoor re-rating holds. 3. Upstream oil and gas. ONGC and Oil India. For every $1 crude price rise is equal to 100 to 150 crore more profit. 4. Metals selective. Underweights and avoid are 1. Realty. Avoid until GSEC below 7%. 2. IT. No Fed cut and earning downgrades incoming. 3. Jewelry stocks. Duty hike impact still unpriced. 4. Consumer durables. Input costs plus demand slowdown. 5 triggers to track. 1. Hormuz trace news daily. If it reopens, we see a 2 to 3% gap up. If it doesn't and situation escalates, we'll see gap down of more than 2 to 3%. 2. US jobless claims and retail sales. Weak data will force Fed to cut rates, resulting in relief to emerging markets. 3. India April trade deficit. About 25 to $26 billion accelerates rupee depreciation even further. 4. Brent crude closing price. Below $100 bullish, 100 to $110 volatile, and above $120 sell everything except defensives. 5th, FII daily flows at 7 p.m. A week of consecutive days of net buying about 2,000 crores daily will give a green light to add positions. Final word for trader, range trade. Sell volatility into VIX spikes. Keep position sizes small. VIX above 19 means violent swings. Don't hold overnight directional bets without a stop loss. For investors, don't panic sell. Don't go all in either. Deploy in 3 tranches. One third now about 23,000, one third at 22,000, and one third held as dry powder below 21,000 if it goes. The Strait of Hormuz will eventually reopen. Crude will fall, and when it does, India, with its DII backbone, record SIPs, and structural growth story, will be the first emerging market to rally hard. Until then, stay disciplined, stay liquid, and watch crude oil. That wraps up week 9. Like, share, and subscribe to Market Insights by Prakash. I'm Prakash Choudhary. Stay disciplined, and I will see you next week. Thank you.